By request, we have Opentext going up against Shopify to see which investment deserves your tech sector dollar. Holy banana bread, let's do this. The bear market has not been kind to tech, especially south of the border where the Nasdaq was down a staggering 38.1%. We did fare quite a bit better in Canada, as our tech sector was only down 13.5% in the last year. Canada's tech sector is not particularly huge, but two of the players in our meager sector include Shopify and Opentext. And today, we will do battle to see which one is more deserving of all that investing green. Before we write our next algorithm, let me know in the comments if you have any exposure to the Canadian tech sector. Thank you for dropping in on the home of free financial content on YouTube. While you are here, please like and subscribe, as you don't want to miss a single moment, and a huge thank you for that click. Opentext is a Canadian software company that specializes in enterprise information management, or EIM. Their products and services help organizations manage, secure, and analyze unstructured data, such as documents, emails, and social media posts. Some of their popular products include Opentext Content Server and Opentext Business Network, which of course is a cloud-based platform for connecting and collaborating with external partners and customers. Opentext also offers a range of analytics and information governance solutions, as well as cloud-based services for managing and securing mobile devices. Shopify, of course, is Canada's big e-commerce company that provides an online platform for businesses to create and manage their own online stores. This includes creating a website, setting up a shopping cart, as well as payment gateway. It also allows them to manage their inventory and their shipping. Shopify also offers a variety of apps and plugins that can be added to a store to provide additional functionality, and they, of course, also provide point-of-sale solutions. Both companies were impacted by the bear market and the collapse of tech, but this battle is going to tell us just which one is poised for recovery, and more importantly, which one is poised to be the better investment. This battle will be a three-rounder as we compare surface data in round one, growth in round two, then close with the battle with a round three debt showdown. Without any further ado, let's jump into round one. We will start with Opentext, as their market cap comes in at $11.96 billion, and they have a beta of 1.02. Their earnings per share is 0.74, and their price to earnings ratio comes in at 59.82. We're going to see some higher than normal price to earnings ratios in this one, I suspect. Their return on equity comes in at 3.68%. Their earnings are forecast to grow by 48.59% per year. In regards to fair value, Opentext is currently priced at 34.8% below their discounted cash flow model. Switching over to Shopify, their market cap comes in at $67.86 billion, and they have a beta of 1.88. Their earnings per share is 0.19, and their price to earnings ratio comes in at 279.26. Holy banana bread. Their return on equity comes in at, negative 31.98%. Their earnings are forecast to grow by 19.15% per year. In regards to fair value, Shopify is currently priced at 34% over their discounted cash flow model. This first round was not even a contest, as Opentext beat Shopify at every statistic, save of course for market cap, but that really doesn't hold any weight in a battle. Round one is hands down for Opentext. In round two, we're going to look at growth and dividends. Opentext has a dividend yield of 3.11%, which is paid out quarterly in the amount of 24.3 cents USD per share. Their payout ratio comes in at 164.67%. This is not well covered by their earnings or their cash flow. They did cut their dividend entering 2022, and then they raised it 3 times for a net dividend increase of 15.19%. When we look at growth, their 3-year growth comes in with a return of investment of negative 25.03%. Adding in their dividends, we have a total return of negative 19.98%. Their growth in 2022 saw an ROI of negative 28.95%, with a total return of negative 26.86%. And thus far in 2023, we have, it's positive, we have an ROI of 9.13%. Back over to Shopify. They do not have a dividend. They are 100% a growth stock. When we look at growth, their 3-year growth comes in with a return of an investment of negative 10.17%. Their growth in 2022 saw an ROI of negative, holy banana bread, 66.37%. Yikes! And thus far in 2023, we have an ROI of positive 7.80%. Round 2 is also going to Opentext as they easily beat Shopify in 2 of the 3 growth periods. This is starting to look like a runaway match for Opentext, but maybe, just maybe, Shopify can try and knock this one out with the third and final round. In this third round, we will be looking at debt, and as you know, debt can be one of the most important factors in a company. When it comes to Opentext, they have a total debt of $4.22 billion compared to total equities of $3.85 billion, making their debt to equity ratio 109.6%. That is actually a little better than I was expecting, so yay. Short term, their assets come in at $2.24 billion and their liabilities come in at $1.58 billion. Long term, their assets come in at $7.83 billion compared to $4.65 billion in liabilities. Their debt and interest on that debt are well covered by operating cash flow and, of course, their earnings before interest and taxes, or EBIT. This debt situation is actually not too bad. Oh dear, Shopify's got their work cut out for them. And now on to Shopify. They have a total debt of $912.72 million compared to total equities of $8.69 billion, making their debt to equity ratio 10.5%. Holy banana bread, that is not too shabby. Short term, their assets come in at $6.01 billion and their liabilities come in at $905.22 million. Long term, their assets come in at $5.19 billion compared to $1.61 billion in liabilities. However, their debt and interest on that debt are not well covered by operating cash flow because, well, that happens to be in the negative. Despite the negative cash flow, this debt situation is stellar, and the only real negative is that their debt has been increasing, but they can totally manage it. So round 3 is boom, bang, going to Shopify. They may not have knocked Opentext completely out, but they knocked them down a couple of times for sure. So who is the winner of this battle? I really liked Opentext in the first 2 rounds as they didn't suffer as much in the bear market as Shopify did. However, that third round was significant, and Shopify can't afford to weather the bear market better than Opentext. Opentext would definitely be a better choice if you need dividends, but even then, their payout ratio shows that they are not sustainable. As much as I want to find a silver lining for Opentext, the reality is they just can't match Shopify with these current fundamentals. Therefore, Shopify comes out as the winner of this battle. They still have some pain in front of them, but they will weather it, and long term, they will do better. Once again, this is a match I would love to check in on again in the bull market. It does not have to end here. Check out my video on crazy ROE high dividend stocks that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like. Your click will decide who is right, and I will see you in the next video.